So this is lesson number 5 today, and the show's titled "Bitcoin is too risky not to own." And so we're going to talk about a couple different things here. The main focus is going to be speculation versus investment. How does an investment differ from speculation? So I'm going to actually look at our. Oh, that's not the right one here. There we go. I asked Perplexity today, how does investment differ from speculation? So we're going to see what Perplexity had to say about the two here. Because I really believe that when you ask most people who haven't spent any time looking into Bitcoin or studying Bitcoin, a lot of people consider it to be a speculation. It's a speculative asset, they call it. But anybody who's been in Bitcoin for a while knows that that's not true. Know that there's a little bit more to the story there. And so that's what we're going to be diving into today for a couple different parts of this: time horizon, risk, and the basis for decisions. So Perplexity says investment and speculation mainly differ in time horizon. And that's a big part of the Bitcoin ethos is Bitcoiners, for the most part, have a very low time preference. The risk level and how decisions are made. Investment focuses on long-term, researched growth, while speculation focuses on short-term, high-risk bets on price moves. So these are the three kind of topics here that we're going to be talking about today in a little bit more depth. So number one is time horizon. How long do you plan on holding your capital there? Because basically whenever you're making decisions about your finances, you're kind of like a capital allocator of your family, right? Because you go to work, your wife goes to work, or your husband goes to work, and you earn a salary or your business makes a profit and you pull some of those profits out. And that's your income for the month. Of course, you have expenses. That could be your mortgage, your rent, your vehicle payments, your groceries, your gas, and anything that you have left over at the end of the month. That's what you want to be storing. You want to be figuring out how to keep that. That's kind of the main idea here. And so you are the capital allocator of your family. When you're deciding how to store those profits, some people might buy a pair of shoes on the internet, especially if it's Black Friday. Some people might go out for supper. Some people might buy stocks, a little bit more into their S&P index. Some people might buy some gold or silver. So you are the capital allocator of your family. And so when you're thinking about this stuff, it is very important to differentiate between investments and speculation. And kind of going back to our original, maybe I'll share kind of why we're talking about this today. Where's the 88 lessons here? Here we go. So one of the first things that the first show that we did, lesson 1, we talked about basically the expectations versus the reality. So in other words, how the public perceives Bitcoin versus the reality. Anybody who spent time in Bitcoin, studying Bitcoin, understands that most of the expectations in the mainstream narrative is nonsense. So this one here, a lot of people think that Bitcoin is a speculation. They think it's a speculative, risky asset, but the reality is that it's an investment. It's a store of value. It's the best store of value that has ever existed in human history before. And so we're going to talk about why a little bit today. So if we go back to the time horizon here. So it says investments usually mean holding assets for years or decades, aiming for steady appreciation and income like dividends or interest. So we know that Bitcoin does not have dividends or interest, and that's why a lot of people shy away from it too. So we're going to talk about that a little bit as well. Speculation, on the other hand, usually means holding for very short periods, from minutes to months, aiming to profit from quick price swings. Risk and expected outcome here. Investment accepts moderate, measured risk with a reasonable expectation of gain based on fundamentals such as earnings, cash flows, or asset quality. So Bitcoin does not have earnings. It's not a company. It does not have a CEO. There's no board of directors. There's no products. There's no services. And so there's no cash flows either. But what it is it's a quality asset. It's the best store of value. It's the best battery for your energy, your time and energy that has existed in human history before, which is a pretty big deal. So we're mostly focused here on the asset quality for this part of it. On the other hand, speculation accepts a high chance of loss, sometimes total loss, in exchange for a small chance of outsized rapid gains. So the first thing that I think of when I see these two things, holding for very short periods from minutes to months, aiming to profit from quick price swings, and a high chance of loss, sometimes total loss, in exchange for a small chance of outsized rapid gains. The first thing that I think of there is crypto, altcoins, XRP, Zcash, Dogecoin, Ethereum. That's what a lot of people do when they think about crypto, is that they want a real quick return. They want to be able to put $100 into it and get $10,000 next month or tomorrow even. And I think that that's just a side effect of where we are right now in society. It's mostly desperation. That's what it is. Because you see, there's a lot of, I think a lot of people think that it's like 20-year-olds and 25-year-olds and 15-year-olds that are gambling on these altcoins. But the reality is that it's everybody, because everybody's desperate right now, because we're at the end of a fiat system that is dying. It's already dead, in my opinion, that we just haven't had the funeral yet for it. But in that world, everything's going up in costs. They're printing more money. That money's flowing into assets like real estate, like the stock market, like Bitcoin. And if you don't have any of those assets, you're getting left behind, because everything's going up in cost around you. Houses, cars, vehicles, groceries, gas, everything's going up. But because you don't have any assets, you don't have any say or any store of that newly created value, essentially, is what it is. It's artificial value increases. And so everybody's desperate. And it's actually very surprising to me how many people over the age of 50, 60, 70 who are actually taking big bets on some of these altcoins and cryptocurrencies because they're desperate. And they're desperate because they did what society told them to do. They worked at a job for 30, 40, 50 years. And all of a sudden in 2020, the government printed 40% of the money supply and basically stole 40% of their wealth. So there's a lot of baby boomers out there who should be retired right now, who should be in Mexico, who should be sitting on a beach, who should be looking after their grandkids every day, whatever that is. But a very, very small percentage of them actually are. And it's because of money printing. It's because of inflation. And that has led to desperation. And so that's what we're seeing. That's why a lot of people are taking some of these bets for the short term. So the third one here is basis for decisions. So investment decisions are mainly based on analysis of underlying value, business strength, balance sheets, cash flows, macro trends, or long-term adoption. So again, Bitcoin is not a business. Bitcoin does not have a balance sheet. Bitcoin does not produce cash flow, but we can look at these things: macro trends and long-term adoption. And on the flip side of that, speculation decisions lean more on price patterns, momentum, news, sentiment, and less emphasis on what the asset is fundamentally worth. Man, does that sound familiar right now? And I think before we go any further, it is important to note that there is a difference between Bitcoiners, people who actually understand what they're holding, and people who own Bitcoin. There's a big difference there. And right now, if you look at Twitter and YouTube comments, you'll see a lot of this. The charts are saying this: the news, the FUD, the latest quantum, the latest core versus knots, the latest whatever it may be. It's all news. It's all FUD. It's all sentiment. It's a lack of understanding is what it is. So that's kind of the difference between an investment and a speculation. And we're going to dive a little bit deeper into this. So I see a bunch of comments in here. I'm not ignoring you. The first part of the show is just kind of like a presentation here, I guess you'd say. And the second part of the show, I'll get to all the comments if there's any questions and things like that. So I just want to say hi to everybody in the chat. I think this is the most we've had for these lessons so far. There's 60 people over on YouTube, and I don't know how many people are on Rumble or Nostr. So let's get to the spreadsheet here. I think the first 4 lessons, I didn't take a sip of coffee until I was done this. So I'm feeling a little bit more comfortable up here now. So let's start with time horizon. This is going to be my favorite part of this one. This is super, super interesting and probably the most important part of Bitcoin to understand. I think that anybody, regardless of your technical knowledge, regardless of your financial background and your literacy, I think anybody can understand this part here. So time horizon, I don't think that anybody who's investing in Bitcoin should be there for less than 5 years or for at least one Bitcoin cycle, which is 4 years approximately. As we found out last lesson number 4, Bitcoin doesn't really care about the human clocks or the human calendars. It has its own calendar, the time chain. So every 210,000 blocks, there's a halving where the new supply gets cut in half. So I don't think you should get into Bitcoin if you don't plan on being there for at least one cycle, 4 years. And once you get to the end of that 4 years, you're going to learn a lot. You have a little bit of skin in the game now, and you're going to start to pay attention to podcasts, videos, series like this, and your knowledge is going to increase. And so at the end of the 4 years versus day one, you're going to be much more equipped for the future. And then you can kind of reflect. You can say, okay, I've been in this for 4 years, and nobody who's held Bitcoin for 4 years has ever lost fiat conversion. Nobody's ever been in the reds after 4 years of holding Bitcoin. So the price goes up, the price goes down, and that's why we're trying to compare here between investment and speculation. So you should not be getting into Bitcoin if you don't have plans to be there for at least 4 years. After 4 years, that's when you kind of re-examine things. You reevaluate. Maybe you reallocate. Maybe you take some more out of your stocks, put it into Bitcoin. Maybe you sell all your Bitcoin if it's not for you. But you should be here for at least 4 years or one cycle. Here's the magic number in Bitcoin. This is 2 quadrillion, 99 trillion, 999 billion, 997 million, 690,000 sats. That's the magic number. That's what you should get a tattoo of, because that's the most important number in financial history. That's the most important number in financial history. That's how many sats will ever exist. There's not that many sats yet, as we saw last week. Only 95% of the Bitcoin has been mined. But at the end of 2140, this is the maximum amount of sats that will ever exist. So it's a pretty big deal. And when we're thinking about the time horizon here, so there was a comment actually on a YouTube post that I made sharing this number. I think it was a nice picture with this number, and said that there will ever only be 2.1 quadrillion sats. And somebody in the comments said, there's more sats than dollars, LOL or LMFAO, whatever they said. And that's a good question, right? Because our thesis here is that one day one sat is going to be equal to $1. It's going to have the purchasing power of $1 today. Right now, you can buy 1,100 sats in the US for $1. And so somebody said there's more sats than dollars out there, LMFAO. And I said, well, number one, and this is important to understand, there's numbers that they tell you. The Federal Reserve, the Bank of Japan, the Bank of China, whatever it's called, they tell you these numbers. How many dollars exist? How many fiat dollars are out there? How many US dollars? How many Canadian dollars? How many euros, pounds? We have these numbers, or we think we do. But how many of those numbers have actually been verified? The Federal Reserve, who's tied very closely with JP Morgan, they have the ability to create money, and they've had that ability since 1913. And since 1913, they have never been audited before. They have never been audited before, which means that they could tell us whatever numbers that they want to. There's never been any verification over how many dollars actually exist. So even if that's true, let's just say that the numbers, all the numbers that they give us, because they're so used to telling us the truth about everything, let's just assume that the numbers, the figures, the data that they give us are legitimate. There's one key difference here between dollars and sats. One of these goes up forever in terms of purchasing power, and one of these goes down forever in terms of purchasing power. And so we're going to do a little quick experiment here. And I use these numbers here. I've done this before with much larger numbers, and it's kind of hard to follow. So I wanted to use smaller numbers for this one just to kind of prove the point. So keep in mind here that the actual numbers themselves do not matter. This could be 100, this could be a million, this could be a million, this could be 1 quadrillion. These numbers do not matter. It's just what happens with it. So in Bitcoin here, let's say that you have $1. You have $1 in your bank account, and there's only $1,000 out there in circulation right now. So you have 0.001 of the network of the total wealth in the US. You have 0.001. That's your stake. That's your ownership of the US network, essentially. That's what the US is. It's a network. Whereas in Bitcoin, if you had one sat and there were only 1,000 sats that ever existed, that's how many are in circulation right now. You would also have 0.001. That's your ownership in the Bitcoin network. But the difference here, there's a key difference. Because with fiat, they print more of them every single day. So maybe today they printed 10. Oh, your ownership just went down. Maybe tomorrow they print 30. Oh, your ownership just went down even more. Your number didn't go up or down. You still have that same amount sitting in your bank account. And then next week they pass a new bill and they decide that we need a new debt ceiling here. We need to send more money to Pakistan for transgender studies. We got to print more money. Oh, your ownership went down even more. The amount that you have didn't change, but because they have the ability to create more of these, your ownership goes down. And then next year we get a new president. Maybe Joey Biden comes back from the dead and he decides that he wants to print more money. And your ownership goes down even further. Again, your number in your bank account did not change, but your ownership of that network went down significantly. You lost 16% there because they printed so much money. In 2020, they printed 40% of the total money supply. So what would that be here? We got 80, 90, 100, 210. They printed 40% of it. So you lost 29% of your purchasing power. You had the exact same amount of money in your bank account. You lost 29% of your wealth. That's the fiat system. Bitcoin, on the other hand, you have one sat, and there's 1,000 sats that will ever exist. This will never change. Your ownership of the Bitcoin network will never change. Actually, that's a lie. Because you know what happens in the Bitcoin network? People lose their coins. People lock themselves out of their wallets. What did I do there? People lock themselves out of their wallets. And so what happens when that happens? So let's say that Sato Millionero locked himself out of his wallet and he had one sat there. He had one sat in his wallet. Gone, locked out. Your ownership actually goes up. Your ownership of that network just went up. And on the flip side, maybe Cleaner Machine, he had two sats kicking around and he lost the private key, or his dog ate it, or he had a boating accident and he locked himself out of his wallet. So those sats are unspendable because nobody can access that wallet. And so what happens? Your ownership goes up again. So that's the difference here. And it's very simple to understand with numbers like this. And keep in mind here that the numbers do not matter. This could be 1 billion. This could be 1 quadrillion. This could be 100. This could be 100,000. It does not matter. So the basic point here is that one goes up forever in terms of purchasing power. One goes down forever in terms of purchasing power. But the other thing too is no matter how much you have in the Bitcoin network, Let's say that you have 1,000,000 sats. You took $1,000 units of illusion and you bought 1,000,000 sats. Your ownership of that network will never go down. As long as you keep those 1,000,000 sats protected, you hold the keys to those, your ownership in the Bitcoin network will never go down. It can only go up. And on the flip side of things, if you had $1,000,000 in a bank account, your purchasing power will never go up. It will only go down. Pretty important to understand that. Honestly, I think that's the most important thing, the simplest thing to understand in Bitcoin. And so here's the thing about it is like the other component of this is that that's if everybody stayed the same, if all the Bitcoiners who are here today, they held their Bitcoin, they spent it, they saved in it, your ownership still would not go down. But here's what happens. Your friends are going to start getting Bitcoin. Your family members are going to start saving in Bitcoin. People you've never met are going to start buying Bitcoin, and they're going to slowly start to understand Bitcoin. And once they understand Bitcoin, they're never going back to the fiat system. They're going to hold on to those coins forever, or those sats forever. Small businesses, because it's such a good store of value, businesses around the world are going to continue adding Bitcoin to their balance sheet, taking a portion of their profits and buying Bitcoin with that. Your enemies are going to be buying Bitcoin. BlackRocks, Trumps, whoever your enemies are, Xi Jinping, Epstein's bankers, they're all going to be buying Bitcoin. Investment advisors, everybody's offer right now, but at some point, every portfolio is going to have a Bitcoin component to it. Sports teams, I'm just naming some examples here, but the key thing here is that as this number grows, your friends, your family, the people you've never met, your enemies, these big companies, as they start buying Bitcoin, as this number grows, they're all fighting for this same amount. So every person that understands Bitcoin, there's more people after that scarce supply. And what happens when there's more and more people who are fighting for that same supply? The price goes up. When there's more people, when there's more demand fighting over that same scarce fixed supply, the price has to go up. Incredibly important to understand that part. So that's the magic number. Get that tattooed on your body. 2.1 quadrillion sats. All right, so the next part here is risk and expected outcome. So what's the biggest risk to Bitcoin? You have to ask yourself these questions, because as a long-term holder, somebody who's the capital allocator of your family, you have to ask yourself these things. And so Bitcoin is a very long-term lens. And when you're taking those profits from whatever it is that you do, whatever value you add to the world, you want to store that in the best possible way. So what is the biggest risk to Bitcoin? It's very subjective. What are the expected? It's subjective in the sense that some people think that the biggest risk to Bitcoin is that it becomes captured by the big banks, by the governments, and it's not used as it was designed to be, which is a peer-to-peer electronic cash. Some people might say the value goes to zero. Some people might not care who's using it. They only care about what it's worth. So this is a very subjective question that you have to ask yourself. What are the expected outcomes? If I hold on to this asset based on this for the next 10 years, as more and more people lock themselves out of their wallet, or even if they don't, as more and more people join the network, my purchasing power goes up. That's the expected outcome of Bitcoin. Very important to understand that. I keep saying that, but it really is. Because again, if you have one sat in the network, your ownership will never go down. It cannot go down. It will only go up. So your expected outcome is the longer you hold on to this asset, the more it's going to be worth, the more purchasing power you're going to have in the future, because more and more people are going to join. They're not making more of it. And so the expected outcome here for Bitcoin is that the purchasing power is going to go up forever. That's why people say Bitcoin's going up forever, because of what we're talking about here, because it is. That's how it's designed. That's the only scenario. That's the only outcome here. So here's the best case scenario. This is something you should ask yourself too. Because the best case scenario for me is that this isn't really the best case, but this is the expected outcome for me. One sat at some point in the future will equal $1. And today, you can buy 1,150 sats for $1. So that's the best case, which means that you can trade essentially $1 for $1,150 in the future. That's the best case. I think it's going to be worth more than that as time goes on, because literally this thing is going up forever because of what we just talked about. And so best case, if you subscribe to that theory and you get yourself a couple million sats or a couple tens of millions of sats, or if you can get to 1 Bitcoin, understand what that's going to be worth for you and your family and their family into the future. If you can find a way to obtain that Bitcoin today, if you can find a way to protect that Bitcoin for the next 50, 100, and 150 years, your family is going to have more wealth that they could ever know what to do with. If this plays out like we expect it to here, that's the best case scenario. So it's a pretty high upside for Bitcoin. And then on the flip side of that, what is the worst case scenario? If Bitcoin fails, Bitcoin goes to zero, Bitcoin gets captured. Well, to me, the worst case scenario is you're going to be exactly like everybody else. Because if Bitcoin fails, that means that everything else fails, and whatever wealth you have is going to be worth absolutely nothing because the world has been taken over by crazy psychopath lizards. So the worst case is that you're going to be just like everybody else. That doesn't seem like too much of a worst. I mean, I shouldn't say that, but it doesn't seem that bad. You're not going to get hung at town square. You're not going to get, you're not going to get exiled from your country. You're just going to be like everybody else. That's the worst case that happens here. And the best case is your family has more wealth than you could ever imagine. That seems like a pretty asymmetric trade to me. Basis for decision here. So when you're thinking long-term, you really have to understand the asset. You have to understand the characteristics and what makes the asset what it is. So you have to ask yourself, how long have you been studying Bitcoin? There's probably people in this chat here who have spent thousands of hours studying Bitcoin. And it seems like the more time you spend in Bitcoin, the more understanding you have, the more conviction you have, and the better you feel during weeks like this. So if you spend a couple hours or 10 hours, or you listen to a couple podcasts, just understand that you don't really understand anything. Just know that. Just be aware of that. So when the price is going up or down, it might not make sense to you. But the longer you spend in Bitcoin, the more conviction you have, and the better you're going to feel when the price is going up. Because you have to remember here, why is Bitcoin so volatile right now? Why? It's because it is so deeply misunderstood. There's probably less than 0.01% of this population that actually understands Bitcoin. And so if that's the case, which it is, how could it be fairly priced? How could it not be volatile? If less than 1 out of 1,000 people can actually explain Bitcoin to you in a detailed manner, how could this asset be even close to fairly valued right now? So that's important. How many people have spent 1,000 hours in Bitcoin and went back to fiat? Very few. You could probably count them on one hand, honestly. Because once you see it, once you understand how broken the fiat system is, once you understand how beautifully and perfectly designed Bitcoin is, you can't unsee it. The further you get into Bitcoin, the less likely you are to go back to the fiat system. And that's pretty important because that ties into my green light theory. And maybe we'll do a follow-up of this next week talking about my green light theory, which in a nutshell means that the green light means that once the green light turns on in your mind, that's when you understand Bitcoin. You have that eureka moment where you understand the fixed supply, what it means. You understand the magic number and how one asset goes down forever and one asset goes up forever. You understand the difficulty adjustment and why Bitcoin is the only asset that's immune from technological advances. So once that green light turns on in your mind and you see this, you never go back. which means that as this number here of your friends, your family, your enemies, small businesses, as that number grows, as more and more people are added to the Bitcoin network and more green lights turn on, that number never goes down because nobody understands Bitcoin and then decides that they're going to go back to a system where humans have the ability to print money. So you combine all this together and you can see why Bitcoin is such a good investment. It has nothing to do with speculation. The only people who are speculating on Bitcoin are the people who don't understand Bitcoin. They're the traders, the people who are trying to swing trade, trying to time the market, looking at charts. They're the people who are trying to wait out the market, hold on to their altcoins so they can swap into Bitcoin at a later date. They're the ones who are taking profits on their Bitcoin. Those are speculators. But the people who understand Bitcoin for what it is, those are investors. Those are people who are using Bitcoin as a battery to store their time and energy and as an investment for yourself, for your family, for your generations to come. So that's lesson number 5. That's lesson number 5. I feel pretty good about that one. So before we wrap up the clip here, I should say that we do these shows. You're watching it right now, but for the people watching the clips later, we do this show every Tuesday at 2 p.m. Eastern. We do it live. So the first part, hey, Arnie's coming to join us here, maybe. No, he bailed. We do the first part, which is kind of like the presentation part of it. Hey, Arn. And then the second part is like a Q&A, and we talk about some news that has happened throughout the week. So if you're not subscribed, make sure you do, just so you can have the notifications on if you enjoy this kind of stuff. If not, don't really care, but just throwing it out there. You can also, Arnie just showed up here, perfect time. You can send some sats if you got any sort of value from this. If you enjoy what I'm doing here, if you want to support the channel, you can send it to Arnie Boy's wallet here, or you can also send it to jor@rizful.com. That's my Lightning address. So again, if you enjoyed that, if you learned anything, if you want to support this channel, that's the best way to do it. And I always prioritize zaps on Noster, super chats, and zaps to the wallet here. So if you have any questions, that's a good way to guarantee they get answers. And I see some zaps are coming through here on Zapstream. So yeah, Tuesdays, Saturdays, and we also do the Visionary show every single morning, actually, Monday to Friday at 10 a.m. Eastern time on Rumble and on Noster. So I wish I had a link to that, or I wish that I had a QR code that you could scan, because we talk about a lot of good stuff in there. It's a little bit more than Bitcoin. It's a little bit more focused on like your mindset. So we kind of have three main focuses on the Visionaries community and the Visionaries show. Inner Citadel, which is your mindset, which is the most important part in Bitcoin, in my opinion. You have your Outer Citadel, which is like your network, your community, your physical location. And then we have the Economic Citadel, which is your wealth, your Bitcoin, understanding this kind of stuff. So we try to tie all three of those into the show every morning, the Visionary show. And like I said, that's at 10 a.m. Eastern time, Monday to Friday. And I'll throw the link to that in the chat right now if you're watching this on YouTube.